Welcome back to Alpha Recap. I'm glad you tuned in. Today we're unpacking the biggest market moves from July 20th. As always, if you have questions, you can reach us at stockalpha.ai. Jonathan, great to have you.
Great to be here. Lots to cover from M&A in tech to defense and an energy shutdown in the Gulf.
Let's jump right in. The top three stories that set the tone today were Siemens buying a smaller EDA firm for AI-led chip planning, Lockheed Martin moving to lower-cost interceptors, and Chevron pausing Gulf production ahead of a storm. Big picture, what tied those together?
At a high level, it was a mix of AI-driven product expansion, continued defense spending, and weather-driven energy supply risk. Those are the kinds of stories that can shift sector flows even after the market closed.
Okay, so starting with Siemens. They bought Precision Innovations to add AI-powered system-on-chip design tools to their stack. Walk me through why that mattered to markets today.
Sure. The acquisition is effectively Siemens pushing AI earlier into chip design, what people call shift-left optimization. In plain terms, that means using AI to explore chip designs faster and find better trade-offs earlier in the process, which can shorten design cycles and reduce costly late-stage changes.
So faster designs, fewer surprises down the road?
Exactly. And there's a systems angle here. AI-driven electronic design automation makes the demand for high-performance compute and accelerators more useful. Analysts pointed to about a 10% efficiency gain mentioned in the release, which is the kind of figure that can speed time to market for customers and reprice roadmaps for vendors in the ecosystem.
Right, and that feeds into other deals we saw, like Vertiv buying a thermal engineering firm for liquid cooling of data centers. That felt like the other half of the same story.
The Siemens move is software and design. Vertiv's acquisition is operations, cooling, and thermal management. AI compute needs both better chips and better cooling. So when you see tuck-ins around both areas, it suggests M&A activity is following demand in AI infrastructure.
And smaller consolidations were in play too. Thesis Elements buying 3D Technologies, CCL launching leadership programs. I mean, when you step back and look at this, it all points to buy and build behavior in the sector.
Yeah, absolutely. Smaller strategic acquisitions and integrations tend to smooth procurement friction and bring new capabilities into larger platforms. Over time, analysts will reassess revenue mix and margins for firms that pull these moves off.
Switching gears, defense. Lockheed Martin announced plans to produce lower-cost Patriot interceptors. What drove that, and what should listeners understand about the implications?
There's growing demand for air defense globally. Lockheed's plan was about making the Patriot system more accessible by cutting per-unit costs. That could expand the addressable market. More customers could afford the system, but it also complicates the margin picture.
So revenue might go up, margins might go down. Or not, depending on scale?
Exactly. Analysts noted that lower unit prices can increase order volumes, and if production scales, you can spread fixed costs. That can actually improve margins. But contract terms, government pricing, and how much of the savings are real versus accounting will determine net impact.
Makes sense. Quick reactions. Defense demand stayed a tailwind, but models needed tweaking. Short and sweet.
Short and sweet.
Now the energy headline. Chevron paused Gulf production ahead of a storm. That was a precautionary shutdown. What did markets take from that?
It was a standard precaution. But those shutdowns can create immediate supply risk and intraday volatility in energy names and futures. Even temporary output reductions can amplify price moves for oil-sensitive equities.
And related to energy and transport, American Airlines had a rough day. It fell nearly 4% on heavy volume. Not a great day.
Right. Airlines remain sensitive to fuel, demand signals, and macro headlines. Heavy trading in the stock made the move more pronounced. Event-driven volatility is still a big theme for cyclicals.
Quick reactions. Air travel worries. Fuel watch. Got it. We also had some legal and policy noise. AeroVironment got multiple law firm notices about potential securities suits, and a group called Treatment Action Group pushed back on an OMB rule. How did those stories play?
Litigation notices can elevate short-term volatility. They don't always lead to a case, but they increase uncertainty until things clear. And the Treatment Action Group's challenge to the OMB rule was about scientific independence and potential impacts on infectious disease research funding. That's a policy risk that could ripple into biotech portfolios exposed to federal grants.
Understood. These are event-driven risks that can move specific names even when broader markets were quiet.
Exactly.
Let's hit the market movers in high-volume tape. The DRAM Focus ETF rose about 0.6% to about $52.66 on heavy turnover. Bitcoin-related funds traded huge volume with a small decline. What should listeners make of these flows?
Large ETF flows and new ETF launches can concentrate trading and cause outsized moves in otherwise steady markets. The DRAM ETF move suggested fresh money or rebalancing into memory exposure. For highly liquid ETFs, even relatively small net flows can produce noticeable price action.
Netflix also popped into the headlines. Phillips Securities lifted valuation references to about $95 to $100 versus a mid-80s share price. Analysts noted relative valuation as the reason.
Analyst notes can shift sentiment, particularly for large growth names. Upgrades or target raises don't guarantee a sustained move, but they can catalyze flows, which traders watch closely.
And on the entertainment side, the Odyssey movie opening drew about 4.3 million visitors opening weekend. That was a short-term box office headline tied to theatrical operators. Kinda surprising, huh?
Honestly, I was a bit surprised by that one. Big openings like that can help entertainment-related names for a quarter or so, but it's usually a short-lived boost, unless it signals a broader trend in box office recovery.
We also saw a security certification. Datamite earned ISO/IEC 27001-2022, which could ease procurement with big OEMs. Why does that matter?
Certifications reduce friction in enterprise sales. If a platform meets recognized security standards, it's easier for large manufacturers and retailers to put them on approved vendor lists. That can speed contracts and be a modest revenue catalyst.
Good. Retail and Edge AI were also in focus with the Tiger 2026 report. And Retail NO coming up, expect announcements around Edge AI, digital signage, and point-of-sale convergence.
Yes, those events tend to generate vendor updates that can move names in payments and retail automation, especially when pilots convert to rollouts.
Quick rapid-fire recap before we wrap. Chevron paused Gulf production ahead of the storm. Watch restart updates. Siemens added precision innovations and cited about a 10% efficiency number. Lockheed planned lower-cost Patriot interceptors. AeroVironment faced law firm notices. The DRAM ETF was up about 0.6% to about $52.66. American Airlines fell nearly 4% to about $14.98. Netflix got a valuation uplift to roughly $95 to $100. Anything else to flag?
Flow dynamics in high-volume ETFs and whether whale activity sustains momentum. That's a near-term watch. Also, any contract details from Lockheed and restart bulletins from Chevron will be important for sector traders.
All right, let's close with clear takeaways for listeners. Jonathan?
3 takeaways. 1. AI integration is driving M&A and infrastructure plays across the stack. Design tools, cooling, edge deployments, and analysts are likely to reprice roadmaps accordingly. 2. Event-driven volatility dominated today. Storms, legal notices, analyst notes, and movie openings all moved single names. 3. Defense and government spending remain a structural tailwind, but pricing changes, like lower-cost interceptors, require model recalibration around margins and volumes. Analysts note these are scenarios, not recommendations.
Good framing. Quick reactions. Clear, actionable context, not advice. Thanks for that.
Yep. And remember, this is informational only. It wasn't personalized advice, and nobody should take it as a buy or sell signal.
Exactly. If you want to follow up, head to stockalpha.ai. If you have questions about anything we covered today, head to stockalpha.ai where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll see you next time.